Hello folks, I'm LA Little and this is your daily NeoTA Wrap. We take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves just one question. What happened today? What does it tell us about the coming ones? I do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel LA Little. Last night when we were talking, I said that we probably should expect this market to try to sell down today. And that's what it did, except it only lasted about an hour, which is, I guess, par for the course with the bullish market. It does not want to stay down. We had the Dow close up 0.4, the Russell up 0.5, S&P up 0.2. Pressure was in composite and NDX, in particular Apple selling down on the NDX. So Apple pops up to 135, comes down, test about 130, closes I think around 132. Elsewhere, gold got another nice pop higher. We had silver doing the same, and the dollar was down 0.5%. We're going to look at the dollar here in a bit. Let's go in and look immediately at the charts though. So if we pop into the S&P 500, so the S&P comes back, test into the support area, right, in particular into these breakdown bars. You had one here and one there. Top of this one 2097, top of that one 2102. Where do we come to? 2094.89. So we pop into both of them, test into them, flip around, go back the other way. Not enough pressure in front of the Fed to make this thing go down. What are they going to do? They're going to hang it up here, try to break it out tomorrow. So we'll see if they can do it. If you look at this, this looks kind of similar to what we've seen before, where this market just doesn't want to give it up. You had a little pullback, hammer reversal back here. Now you've got one here. Volume a little bit heavier, right? But it was also a little bit heavier back there as well. We'll see if it matters. It's all going to be about just how easy is the Fed going to be, because we know the economy's not like gangbusters. We don't have inflation. You don't have, just go down the litany list. You got the dollar problem, or at least the perception of the dollar problem, although today the dollar tried to break down. And, the Fed, I don't even know if the Fed wants to, raise the rates. They keep saying they want to. Maybe they do, maybe they don't. I don't really know. All I know is the Fed has been the savior for this market for so long. It will be fascinating when it no longer is that savior, at least not perceived that way. Here we go with the NASDAQ. NASDAQ comes down. Now the NASDAQ did a bullish retest regen off this prior high. And so we had talked about this, and what I talked about is that if it comes back in there, unless it has the volume, right, this thing's going to have a nice chance of flipping around. And it came in hard right off the bat, drove down there right off the beginning, hammer reversal. It does close lower today, but it held on the bullish retest regenerate. That says it's going to try to go higher. Now, you do have volume escalation here on the way down, right? But you don't have volume escalation with respect to that swing point high that it got over, comes back, test, holds. Now, I typically, when I look at these things, what I like to do is not say, what's just that one. I also want to know what the breakout bar's volume looked like. And in this case, the breakout bar's volume is lighter than the test. And so, this is kind of a mixed bag. I don't know that this move is really going to continue higher or not. It looks to me like a mixed bag. It could still go either way. So I wouldn't read this as saying, okay, we're going to, off to the races. It may work higher, but then again, given the escalation compared to the worst case, which is the lighter volume here, it actually came in harder than it otherwise looks like. If we go over and look at the NDX, NDX kind of the same way, although it didn't come all the way back. I don't think it got back into that high, 44.83. Yeah, it did. 44.83 came back into it. So same thing here, volume escalation, and in this case, you had the same setup, right? Volume was higher here. It came into it, so you got the exact same setup as you had on the NASDAQ. So that one still, in my opinion, can go either way, because if you take the worst case test, right, the worst case test is against the breakout bar, which had lighter volume. If we look at the Russell, now the Russell sold down yesterday, was the weak link. Today gets a reversal, has a little bit heavier volume, test into two swing point lows, reverses and holds. Everybody's set up waiting on the Fed, and that's the way this thing looks as we take a look at the indexes themselves to start this evening. I'll be right back. We'll look at sectors, go over and look at the gold and the dollar as we come into the Fed meeting announcement tomorrow.
If you are serious about trading, TA Today's Tools is the perfect service to help you reach your trading goals. Go to our homepage and click Use Our Tools. Here you will find an overview of this amazing service we offer to our clients. One of the tools you will have access to is the TA Today charts. These charts visually map all the neoclassical concepts that LA writes and teaches about, and is the perfect charting service for neoclassical traders. Learn the trend of a stock you're interested in and see this stock on all 3 time frames. To get started with a free 2-week trial, go to our homepage, click Use Our Tools, and then click the free trial button.
So one of the big things today, in my opinion, in front of the Fed was this sell-off in the dollar. The dollar gets under the swing point low, so it breaks the swing point low. You know, and in most cases that means this thing's going to go lower. But if you look closely, you know, the dollar actually had an ABCD structure, and it's pretty much done. The other piece of this is that the dollar on a weekly basis was coming back into this bar that we talked about last night, 25.21. You got to 25.25 today. I expect it's going to hit that bar tomorrow and probably flip back around and hold. Now, if that's true, that says that the Fed is not going to be nearly as dovish as people think. Now, it may be the case that I'm wrong, of course, and that this thing actually does broaden this range, and that range ends up being this far. But it looks to me like the range is trying to set up right there, and the next range would be underneath it down here, not this one. So I'm kind of suspicious here with this break, thinking that this really isn't the break you think it is, that in fact the dollar is about to reverse and try to head back the other way. Now, if that's true, that should put some pressure on the commodities. And so if we go look at gold and silver, and so if I pop over to the gold chart, so gold today, another nice little escalation in volume, nothing big, but it's coming back up to try to test in the swing point high. And I believe I talked about this one last night briefly. This did a perfect test into the big bar, right, reversed off of it, so it just barely came into this big bar right there, reversed off of it on Friday. You get 2 nice big days up. Gold may get some sort of a little pullback here, try to set up an nested ABCD structure to take it higher. So that's the way gold looks. I believe that dollar is in a range. I just think that off the Fed meeting tomorrow, the dollar is going to bounce. We're going to see some pressure probably in the commodities. Gold, silver, all of those probably. Let's see what silver looks like. And if so, that's going to give us some sort of a pullback in these. Yeah, silver had a nice pop up too. And these certainly can go higher. These are not telling us they're ready to stop by any means. There's nothing telling us that. I'm just taking what we see in the dollar and saying, okay, if the dollar really is going to reverse, that's probably going to put pressure on these. So in the morning, we may see that dollar drift on down, or even on the Fed release of the notes, the meeting announcement, we may see that dollar spike down and then reverse, and the same thing in gold. Gold may spike up and reverse. I'd be careful with that type of action tomorrow off that Fed announcement. Bonds, on the other hand, are trying to go lower. If the bonds are going lower, raising rates, that also says the dollar is probably going to try to go higher, and the bonds are trying to drift on down here. And this big bar, it looks like it's trying to come after it again. I suspect if the bonds do get that deep, they'll only test into the top of this to start with. But right now, bonds have the ABCD structure going to the downside. They have the volume on the downside. Nothing big, but the volume's there. They broke these two swing point lows, came up, did a bearish retest, and now regenerating down. So bonds look to trade lower off the Fed. And then finally, let me flip back up and look at the overseas currencies, in particular the euro. The euro is popping up. It's going to try to come test into that high. Again, I wouldn't be surprised to see a spike into the high, then a sell-off, which would coincide with a spike down in the dollar and then a rally. And if we look at the yen is set up the same way. It's up there right at the top. Lots of swing point highs up here. This thing's going to try to spike into this swing point high, it looks like to me, and that gap area is just above it. So that all looks like that's the way that's going to try and play out tomorrow. And if it does, then that may give us some sort of a reversal in all those markets right across the board. I'll be right back for the final thoughts. I've said for quite a while now that our market is really dependent on overseas markets, and I've got the Sensex up. And it's not so much this market that it's dependent on, but for my friends in India, I talked about coming down to test this. You test it, and break. It looks like it broke on higher volume. And, a little reversal today. I suspect it's going to come back up and do a retest regen. But if I look at this on a weekly chart, this is set up a pretty nice setup to get a retrace lower. And I'm curious to see if this is going to retrace back down into these lower areas. As I said before, the hot spot to buy this thing is down here. If this can retrace deep, that would be a great spot for folks to try to pick this up at a much cheaper price than it's currently trading at. And so, the Sensex, if it's not on your radar, if this little retest regen fails and does shoot lower, I'd be very curious to see how it behaves when it gets down to this area. I suspect it's going to set up a very nice buy if in fact it can get that much lower. If we go over now though to what's driving our markets, it's Europe and it's Asia. Asia's still tugging higher, Europe's still going sideways. The CAC itself had popped up yesterday, got over the highs, actually got right to the highs, comes down today, does a takeaway bar back, right? This is just a consolidation range. I still think it's going to try to get back into this swing point high. Now, if the euro starts to fall, that should help these markets, not hurt them. So, maybe this consolidation is about done if in fact that's the way it plays out. The reason I keep thinking it's not is because of the DAX, because the DAX itself is having more problems, and the DAX came down today, still got these two swing point lows, and so at this point the DAX is actually set up two swing point lows on this time frame, right? So a break of these lows could get you some escalation to the downside. If we look at it on the weekly, how far would it go? Well, it's like I've told you before. I think if it does break, it's going to come right down and set up a buy at the bottom of this support zone. And it's not going to really go as far as people might think, even though it might look that way on an escalation down. It's probably going to be a buy the first time on that break. And that's because it's going to coincide with that retest regen on the CACs. The markets that just won't quit, of course, are over in Asia, and it's in particular Shanghai. Shanghai goes over the highs, has more volume even though it closed lower. That says this thing can go higher again. It's not really done. If we look at the Japanese market was trying to pull back, does a little doji bounce. This looks to me like it's setting up a little small ABCD structure to take it lower. Not much, but a little bit lower, come back into these highs and do a retest regen. And then if I go over and look at Hang Seng, the Hang Seng market cannot drop as long as Shanghai wants to go higher, and it's just hanging over the highs now. So overseas markets, Europe, still consolidation. Asia, still no give up. Our markets, they can actually go either way tomorrow off the Fed. Given all the ox markets, it looks to me like the Fed is probably going to juice the markets a little bit and then we're probably going to fall right back down again. Now, whether that happens tomorrow after the minutes or after the meeting announcement, or if it waits until Thursday and does it, but it does look like this market's going to try to pop up to the top one more time and then potentially come crawling back down again. And so, my take here is probably a little bit more upside tomorrow based on what happened today, and then roll back over and try to come down one more time. That's it for tonight. Thanks for joining me. Have yourself a great night. Take care, and I'll see you tomorrow. Good night.